If you love our crypto content or are looking to learn even more about crypto, be sure to check out and subscribe to our new YouTube channel after this video dedicated to all things crypto. Find new videos every week. Be sure to check the link in the description.
Hey, I'm John Quinn. I'm the Chief Investment Officer and General Partner of Decentralized Capital. I've been in the crypto space since 2015 when I co-founded Storage Labs, which is a decentralized cloud storage provider. Prior to that, I was doing traditional finance. I was in investment banking at Credit Suisse and Fleming's, and I also did global markets at Deutsche Bank, and also ran a $200 million private equity fund.
What is DeFi?
DeFi is short for decentralized finance. And so if you can imagine a financial primitive like lending or trading or insurance, that financial primitive is being boiled down into a protocol, much the way that TCP/IP is a protocol for the web. And within these protocols, they do one specific thing. But it really brings supply and demand together to interact with the protocol directly without any middlemen. We like to say that the middleman has been replaced with middleware. And what makes it so interesting as well is that it's open source and it's transparent and it's highly inclusive, such that anyone with a mobile phone and an internet connection can participate in this. And it's especially important when you think about there's 1.7 billion people globally that are unbanked. And now there's 3.5 billion people that have smartphones, which has doubled in the last 8 years. And with the advent of Skylink, you can see a future where everyone's going to have a smartphone, everyone's going to have internet, and they're going to be able to have banking services through decentralized finance. And what we believe in part of our investment thesis is what we're seeing now is basically the building of the backbone of the global financial network that's going to touch every human on the planet.
How do you value DeFi projects?
We're seeing a Cambrian explosion of projects in this space, and this is being buoyed by a large amount of capital flowing into the space. So total value locked is a metric widely used to measure how much collateral is in the ecosystem. Kind of went from 1 billion in January of last year to about 15 billion by the end of the year, now over 40 billion. We believe over 200 billion by the end of this year. Basically each protocol has a different value capture mechanism, and some of these assets are more, some of these protocols are more asset driven, and some of them are more cash flow revenue driven. And so it really depends on the type of business it is to basically understand the value capture mechanism within the protocol. But what we do is basically we look at the on-chain data to be able to measure what the asset flows are and the cash flows. And we ingest all of that on-chain data and then do financial models on top of that that basically mimic what you'd use in traditional finance, whether that be an asset-based methodology or a cash flow-based methodology. So it kind of depends based on the protocol.
Do we see product market fit for DeFi?
I think that when you start to see tens of billions of dollars flow through an ecosystem and each one of these has code that ostensibly is hackable, and they haven't been hacked, then I think you are really starting to see product market fit. And once we get to 100 billion, I believe in the second part of this year, it'll be even more clear. But don't kid yourself. This is very early days. This is perhaps 92, 93 internet days. So we're in the very early stages. Only 1.5 million people globally have interacted with smart contracts using DeFi. So if you're looking at this video, you're one of the very first people to know about this. One of the great things about DeFi is all of the on-chain data.
Sorry for interrupting your video, but I have an important message to share. At Real Vision, we pride ourselves on providing the very best in-depth expert analysis available to help you understand the complex world of finance, business, and the global economy. So if you like what you see on Real Vision's YouTube channel, that is just the tip of an iceberg. You should come over to realvision.com and see how we are not leaving any stone unturned, from publishing more in-depth videos, live discussions, written reports, and our latest feature, The Exchange, where you get a chance to engage with experts and fellow subscribers and learn from everyone's experience. It is an experience which you live and you learn from. So if you go to the link in the description or go to realvision.com, it costs you just $1. I don't think you can afford to be without it.
Have interacted with smart contracts using DeFi. So if you're looking at this video, you're one of the very first people to know about this. One of the great things about DeFi is all of the on-chain data is transparent and visible to anyone. So we basically ingest all of that on-chain data into our business analytics software infrastructure that we've built over the last 2 years. And basically do overlays of that on-chain data, whether that be an asset-based valuation methodology or a cash flow-based methodology, in order to basically use what are real cash flows and real assets flowing through them to establish what is fair market value in our view for what that token should be worth based on the value capture, based on the growth and the like. And then we see where the price is trading, because all the assets that we're targeting are traded assets. They may be illiquid, but they are traded, and so there's a price. And so then we're looking at basically the fair market value versus the price, whether there's a compelling opportunity for us to get involved or perhaps to exit a position.
What are some financial primitives being carried over into DeFi?
Well, last year we had some screaming winners in the lending space. We were early investors in Aave and earned about 36 times our investment on that. We were also early investors in Nexus Mutual, which is an insurance primitive that also returned over 15x. So within the broader finance ecosystem, you can think of that being composed of hundreds, if not thousands, of financial primitives. And what we're seeing is the replication of the traditional finance ecosystem now in DeFi. And so your DeFi represents hundreds of financial primitives that will be built over the next year or 2, 3 years, and they're composable. And so part of the network effect between these protocols is that you can kind of plug one into another, like Lincoln Logs, and build other things. And once these protocols have billions of dollars running through them and have not been hacked, then you can have some certainty that they can't be hacked. And then you can basically build financial products that compose multiple of these primitives. Ethereum basically was the first layer one chain that offered smart contracts, which basically enabled people to build applications on top of that. And unfortunately is a victim of its own success. We've seen the theoretical limits be reached in terms of throughput, and now you're seeing massive gas costs and congestion in that network. Other protocols, a chain of chains, have kind of stepped into the fray, and they're basically helping basically do computations off chain or through other chains, and then connect back into the Ethereum network. So you're seeing chains like Binance, which are centralized, their chain, and then you're seeing things like Polkadot, which enable people to basically utilize the Ethereum network, but without the congestion, without the high gas fees.
What is Decentral Park Capital?
Decentral Park Capital is a digital asset manager. We're basically wrapping up our first fund and launching our second fund. It was born from friends and of mine and business associates that were seeking to get exposure to digital assets, folks that I've made money for in the past, and has grown to a team of 6 people and probably 10 by the end of this quarter. So it's been rapid growth in terms of our performance and assets under management. We currently manage about $60 million, and we're targeting $75 million in this upcoming close. This fund is a 24-month fund for decentralized finance. And so we're going to be investing in assets. We're targeting assets that have market caps under 200 million. So these are assets that we believe that have 10x potential within the DeFi space. So we're not going to be there. There are assets that are multi-billion-dollar assets within DeFi. We were investing in those last year before they were multi-billion dollars. And what we're trying to do is identify the new tokens, the new financial primitives that have the potential to reach multi-billion-dollar capitalizations, but to get into them sub 200 million.
How does Decentral Park Capital monitor and analyze developments in the ecosystem?
It's drinking out of a fire hose. It's really difficult. There's now over 8,000 tokens, and so it's challenging. But we've built proprietary technology that basically helps us to ingest on-chain data and basically track that data and basically build our models for fair market value relative to the current price based on-chain data. And that's been really helpful because, for any given financial primitive, there might be 5 or 10 names that are competing in that space. And then we can basically plug all of them into our business intelligence platform and basically measure one against the other and see who's winning and start to make bets within that peer group. We're investing solely in liquid tokens. So generally these tokens have not been listed on Coinbase's or Binance's, but we're trying to basically identify them, and they're currently traded on decentralized exchanges, DEXs like Uniswap and SushiSwap. And we're basically buying them. We've developed proprietary technology to buy them, using traditional finance tools like TWAP and VWAP to get into relatively illiquid names. But we're targeting very early stage, but liquid tokens. So it's a contrast to venture capital, where you might have a 7-year hold period before you have liquidity. Here you have liquidity day one, but the liquidity might not be able to get in large numbers.
In what ways has the market changed compared to 2020?
2020 was really where DeFi started to get product market fit, went from 1 billion to 15 billion in total value locked, how much collateral was flowing through the ecosystem. Now we're seeing it going from 15 billion already over 40 billion here this spring, and it looks like it's going to go well over 100 to 200 billion by the end of this year. There have been just because there's been so much capital flowing through it, there's more and more teams, there's more and more opportunities, people trying to fill in all the financial primitives that haven't already been spoken for. And then there's people that are building applications using these protocols that are almost like Lincoln logs, adding lending plus insurance, and then creating a new financial product. And so it's quite interesting to see, how the Lincoln logs are coming together and building financial products that have more application to a wider audience.
What valuation methods do you use?
We've built a business intelligence platform that we affectionately call the Whopper. So there was a computer in a movie called War Games with Matthew Broderick, and so that was kind of a riff on that. But the Whopper basically allows us to ingest on-chain data and be able to then do an overlay of financial valuation methodologies on top of that on-chain data. So we spend a lot of time, and we've been developing this over the last 2 years, and we're constantly refining it. But what it really does is helps us surface opportunities and things that we should be paying attention to. When something's growing, 20, 30% week over week, then it's going to pop up on the Whopper, and then we're going to say, okay, what's going on here? How does it look relative to its peer group? Why is this happening? And then perhaps we will allocate more capital towards those opportunities. A lot of this is predicated on kind of product market fit and growth, and so this is really just a tool for us to be able to do the quantitative. Okay, how are things moving? And then on top of that, have a qualitative overlay of like, okay, who's the team? What's the tech stack? How are they addressing this market opportunity and the like? But yeah, so basically the Whopper is a very important tool, a proprietary tool for us to for our investment process.
What is your investment thesis?
Our thesis is that what we're seeing now is the underpinnings of a new global financial network. The connotation of that is quite massive. And if you think about it in terms of, the World Wide Web and implications that had on multiple industries, the music industry being one of the most poignant, and how that disintermediated, labels. So if this does play out, and we're starting to see early signals of traditional finance companies going in and seeking yield within the DeFi ecosystem, we think that we're just really in the beginning. We're maybe in the fourth or fifth pitch of the first inning, to put it in baseball terms. So we think it's very, very early days, and this could be a multi-trillion-dollar industry within 5 to 10 years.
Are you investing in DeFi outside of the Ethereum blockchain?
We're definitely making investments outside the Ethereum ecosystem. So we're targeting other layer one opportunities, where basically they have financial primitives similar to those on the Ethereum network. And we're really just looking for things that have, that basically create value to their users and that are showing strong signs of product market fit. But we're blockchain agnostic. We're trying to figure out what is actually of value, and what is showing demonstrable traction.
Do fiat currencies ever go away?
I don't think that they fully go away, but I do think they're being disintermediated by this technology. And, look at the US dollar, with 85% of global trade being done in dollars, and the US economy representing, 20-ish%, and China taking over the first spot in global GDP, is that sustainable long term? I don't think so. China has been very, very successful building out their technology, their tech stack for blockchain. It's called BSN, the Blockchain Services Network, and they're going to use that for their trade finance with all their trade finance partners. So the fiat is being digitized, and so there's central bank digital currencies like the digital yuan that are going to compete with non-sovereign digital currencies like blockchain and Ethereum. So I think they're going to coexist. But I do think that having a currency that's not beholden to a sovereign government does offer, that's based on code and math, does offer a lot of benefits, as we've seen now with Bitcoin having over $1 trillion market cap, basically representing digital scarcity. And so, yeah, I think that fiat currencies, as long as there's aircraft carriers enforcing, shipping lanes, there's going to be a fiat currency. But I do think that digital currencies are going to start to edge away on some of their turf.
Will traditional finance be disintermediated?
I've spent a lot of time in investment banks. I spent, close to a decade in companies like Deutsche Bank, Credit Suisse, Fleming's. And I know I've seen how the sausage is made, and it's not that pretty. And there is a ton of waste within those organizations. So what is happening with DeFi is it's basically metal on metal, where supply meets demand, and all of that waste is compressed into the protocol, and there's a value capture within the protocol that basically the token holders of that protocol participate in. So, I do think that traditional finance will be disintermediated, partially from this, and I think they'll co-opt the technology over time. But what we're starting to see is that Fortune 500 companies are giving agents the ability to put their money, their treasury money, into DeFi to generate yield, to basically pull out crypto, convert back to dollars, and give back to their balance sheet. And so, if that's just the first stages of that happening, really in a world devoid of yield, you could see that happening, basically because somebody has to, there has to be a supply, liquidity pools and the like in order to facilitate trading. I think that people have a lot of liquidity, but they don't have any way to generate yield. And this is an opportunity for people to generate yield on that liquidity. And I think that'll be increasingly attractive for traditional finance companies. DeFi and basically decentralized finance has the potential to be as disruptive as the internet was to retail and the music industry, to finance, as these intermediaries are disintermediated.
How much do you expect the space to grow over the next few years?
If you have a macro view that we're in a risk on right now, then you want to basically be invested in, because we're investing in the riskiest part of DeFi, the early stage of DeFi. And so, our view is that it's risk on until the Fed starts jacking rates, and the Fed has indicated that they're going to jack rates in 2023. So, we're really trying to fit into that time frame and basically have a vehicle for people to express that view, to basically capture outsized returns in that window of opportunity before the Fed jacks rates and it becomes risk off.
Thank you for watching this interview. This is just a taste of what we do at Real Vision. To learn more about the complex world of finance, business, and the global economy, click on the membership link in the description. Give us 7 days to change your life. This will be the best dollar you ever invest.